Hello, good afternoon. You've tuned into Your Stocks coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much for tuning in. As always, a day, a bit more of consolidation that we're seeing coming in on the last day of the week as well. And today we're trading below the 25,000 mark. So as of now, the Nifty is down almost 0.5% in today's trading session. 24,959 approximately is where the Nifty is trading at, down 0.6%. Now, we've not seen any sort of a sharp recovery that's come in also, so let's keep an eye on that. Broader end of the market, that's not doing well. And pull up the advance decline ratio today, clearly in the favor of declines versus advances is what we're seeing coming in terms of the advance decline ratio as well. So that's why the broader end of the market also not seeing anything great, and advance decline ratio, like you can see, in the favor of declines versus advances, 1,757 stocks declining as of now. Now, banks is something that is leading the fall as well today. So, banks is down almost 1% in trade today. Axis Bank, obviously, numbers were not great, commentary not great. That's keeping the stock under pressure. And other than that, we're watching out for a whole host of earnings that'll be tomorrow. So, private banks, we have ICICI Bank, HDFC Bank. Other than that, we'll have RBL Bank, Yes Bank, AU Small Finance, a lot of financial names. And that is why we're seeing, that Nifty Bank today is also leading the fall, waiting and watching out for what's going to be happening with, these two other big private banks also will be key to watch out for. But this is a show where we solve all your stock-related queries, and we will be doing that with our experts for today. Shahina Mukadam, who's an independent market expert, as well as Vaishali Parekh, Vice President, Technical Research at Prabhudas Lilladher, joining in with us. Shahina, as well as Vaishali, good afternoon, and thank you so much for joining in with us. So Friday is not seeming to be that exciting, Vaishali. Today levels below 25,000. If we keep seeing this fall coming in, is that something we should watch out for, actually, in terms of a fall on the Nifty? Is that what we're watching out for, or do you think it's going to be getting a support level somewhere at 24,800?
Very good afternoon, Vinny. Yes, so market, in fact, the whole week has been pretty much sluggish as far as the index is concerned. And today, well, there is a confirmation we are sustaining below 25,000 levels. So yes, as you rightly said, we could look for a target of 24,800 to 24,600 to start with, and it should halt there. But beyond that, it's going to be a little bit of a more corrective move. So till then, I would say very, very small range bound, 24,700 as support.
Okay, keep an eye out on those levels. Rainbound is what we're watching out for. But let's get started with those stock-related queries. And the first query for today is coming in from Subramanian, who's writing to us from Bangalore. He was actually allotted 45 shares of Suryoda Small Finance Bank during the IPO, and that was at around 305. Wants to know the long-term view for Suryoda Small Finance Bank, because they're making a loss on this one. Shahina, your view coming in for this one, because they're holding it for a while now. So what should they be watching out for?
Yeah, so the stock price has not actually given any return. In fact, it's half from its issue price, the IPO price, which was, I think, almost 3, 4, 5 years back. While the overall book is going up, it's got about 10,000 crores of its book. But in terms of numbers, it's really not showing too much of performance. And I would believe that, it is better to switch from Suryoda to some other bank. You could book your losses and move. So I don't see too much happening over here. There are other banks which are available, small finance banks which are available at better valuations. Valuations over here, despite, the stock not having performed, is still 0.8 times book. So I would say switch.
Okay, Shali. Switch is the word coming in here on the fundamentals. On the technicals also, Vaishali, is switch a better option for them now?
Well, I would say not in a hurry. Wait for some bit of a bounce, because it is showing some signs of a bounce back. So I would say keep a range of 130. If he's held on for so long, you may as well hold till 130 as support. And if the stock gets into a momentum, it can go towards 160, 170, and then perhaps switch to, these PSU banks, because those are the ones, because even the frontline private sector banks have already done its bit of momentum. So I would rather wait for a dip in private banks, but PSU look attractive. So if one needs to switch, I would look at PSU banks.
Okay, keeping an eye out on PSU banks also something there, but just wait out for a bit. That's a word coming in from Vaishali. Next query for today is coming from Mihir Sharma, who's writing to us from Mumbai. He's holding 100 shares of Bajaj Auto. Price is 3,100 rupees per share. Wants to know if he should add more. of Bajaj Auto. Shahina, your view coming in on this one.
Yeah, so Vinny, I would say that he should continue to hold. He can hold. It's like a fundamentally long-term strong stock. At the same time, I think to add, it's better to wait for the quarter numbers that will be announced on 6th of August. And there we'll have some bit of management commentary. I think that is important because, the components, like based on the based on some magnets that the companies use, especially for EVs, which is imported from China. There is some issue out there. And also, if you see in terms of the domestic numbers, Bajaj Auto sales in the last month that we saw, auto numbers have been subdued. Exports is doing well for them, but I think we need to wait and see, whether there will be any production cuts or anything, depending on the availability of the important components. So some of their new launches are doing well, but at the same time, I think everything is there in the valuations as of now. Price to book about 6 times, EV by EBITDA about 18 times. So I would say do not add now. Wait for the commentary and decide later.
Okay, do not add now. Wait for the commentary and then maybe you can decide on it. As of now, everything is in the price. Vaishali, on the charts and technicals, what's the story that's playing out, right? Because they are making good profit on this one, but they want to add more. Does it merit adding at this point, or are there any levels that they can look to add if the stock falls?
Actually, if you go to see the long-term chart, I mean, right from 12,500 to now at around 8,000 levels. So, there is a long consolidation band of, say, 7,800 to 8,500. So I would say accumulate from here on, because exact bottom fishing is really not possible. So accumulate from here on, keep 7,800 as your good support baseline, and add furthermore if the stock goes above 9,000, because that is when you are really getting into a trend. So right now I would say accumulate, but I think conviction comes about 9,000.
Okay. Keep an eye out on those levels over there for Bajaj Auto. Next query for today coming from Gaurang Shah, who's writing to us from Rajasthan. He's holding 200 shares of KPIT Tech at a price of 550 rupees per share. They're making a profit on this one. Wants to know if he should continue to hold, look to add more, or exit this one. Shahina, what are you watching out for this time from KPIT Tech as well? Given IT numbers so far, TCS Infosys was not that exciting, but LTI, Mindtree, Wipro, we are seeing that some bit of that commentary is also coming for Wipro. Maybe H2 is expected to be better for most of these companies. So then KPIT Tech, those mid-cap IT names, does it merit here?
Well, KPIT is also in a similar boat, I think, like Wipro. First quarter numbers, which are expected soon, next week. There, I believe it is going to be subdued. They are facing some issues in terms of their overall growth. I think both revenues as well as EBITDA could be subdued. But I think over the next, second half will be better. So it is a similar story. So, and I think valuations, while the stock has corrected substantially, if you see last couple of quarters, but at the same time, I think even at current levels, valuations are not cheap. So I would say you could, but it's a good stock for the long term. So you could actually hold, but book part of the profits. So hold some, book some profits, and hold the rest for long term.
Hold some, book some profits, hold the rest for, profits is what we could watch out for. On the technical front, KPIT Tech, because they are also saying that they're ready to hold, buy, or just completely exit. Vaishali, what's your view here?
In my view, of course, see, the stock inherent strength is there. Right from 1900, it has taken the support of a 200 period at around 1100 levels. So the tech stocks being a bit corrective right now, this can retest 1100 levels, and that would be a very good level to add more. So in my opinion, for long-term perspective, definitely add. Look at 1100 levels as support.
Okay. Watch out for those levels over there for KPIT Tech. Next query for today coming from Naman Kapoor, who's writing to us from New Delhi, holding 100 shares of Suzlon Energy. Price is 20 rupees per share. He's a long-term investor and wants to know whether he should remain invested in Suzlon Energy. Shahina, your view?
He's gotten at such an attractive price. So he can hold part of it, in my view. Continue to hold. And actually, the performance also is pretty strong. If we saw FY25, 69% growth in revenues, good growth, doubling, profits doubled actually. And management commentary also for FY26 is very strong. They're talking of 60% growth in revenues. Definitely profits also will be up in a good percentage. So I would say you can hold part, but valuations here also are pretty expensive despite, the good performance. If you see EV by EBITDA 30 times, 1 year forward, I'm talking of FY27, and price to book 10 times. So stock is doing well, but I would say take some money off the table.
Okay, that can take some money off the table for Suzlon Energy. As of now, though, overall also they have done well in terms of fundamentals, but some money is what you could book out right now. Vaishali, on the technicals?
Well, technical level, the trend is intact. There's nothing really happening for now. It's getting into a consolidation mode. So, according to me, it should be a hold and look for a higher target of 85.90 once the stock gets into momentum and a rally, because it is showing upside projections. And I think in long term, it will give higher returns.
Okay, keep an eye out on the levels over there also for Suzlon Energy. But on that note, we're going to sip into a very short break. But remember, you can tune into CNBC TV18 Prime, bringing you insights from policymakers, business leaders, and economists shaping both the world and India's future. CNBC TV18 Prime decodes global shifts and their impact on Indian businesses, giving you unparalleled insights. Tune into CNBC TV18 Prime at 12 noon for the Global Reset, at 1 p.m. for the Big C, and Global Lens at 8:30 p.m. Welcome back to your stocks on CNBC TV18. We still have with us Shahina Mukadam as well as Vaishali Parekh to solve all your stock-related queries. Let's move on to the next query for today. We have Tejvita, who's writing to us from Bangalore. This is an investment query. Now, they're asking if they can invest in GSK Pharma at the current level. Shahina?
Well, GSK Pharma is a steady growth stock. So you can invest in it, but not at current levels. I would prefer if he could buy it somewhere close to maybe 2,800. I sort of looked at the numbers, and their valuations, if you look, are not, too expensive for a multinational like GSK, Glaxo. But at 45 times P, I still think that, it is going to, consolidate slowly and then move up again. While the parent has, Glaxo has been launching some of its parent's new products into the Indian market and cutting costs. So it has been able to protect its margins. At the same time, I think in pharmaceuticals, it is better to have a portfolio of stocks. And here I would add some of the Indian stocks, like the Indian pharma stocks, something like maybe a Biocon, Arbindo. I think these stocks he can add to his portfolio. I would prefer them. In fact, over Glaxo, if you're taking a 3 to 5 year investment perspective and create a portfolio.
Okay, surely. So that is what you can do. Obviously, GSK, yes, but not at the current levels. And Shahina prefers maybe something like an Aurobindo or a Biocon. That would be greater for the long-term 3 to 5 year time of story. Vaishali, what's your view coming in for GSK Pharma? Because in the 6 months, you're seeing it move up from around 2,000 levels to 3,000, about 3,000. Now, just in the last 1 month, specifically, you again started seeing that bit of a decline coming in, right? So what are we watching out for technically? Is it a good level to enter GSK Pharma right now, or maybe they could look at some of these other pharma names?
I would say yes. My view matches with Shahina's, because we have seen a one-way rally. So let it retrace a bit. So technically, I would say the retracement ideal level is 27,800 too. So I guess wait for this level and then get into the stock, because overall we are seeing good growth trajectory in this, but might as well wait for a dip and then get into the stock.
Okay, let's move on to the next query then. This query is coming from Bala Subramanian, who's writing to us from Bangalore. He's holding 200 shares of ICICI Prudential Life Insurance at a price of 334 rupees. What should he be doing with the stock now? Shahina, we had the numbers also come in for them as well. What are we watching out for now?
Yeah, so the numbers were a bit subdued, but the commentary was good. So here also again you can advise to the investor to take part profits, hold the remaining for long term, because while the first quarter was a bit subdued in terms of AP, I believe the management is talking of at least a 12% type of growth over the next 2 years, or at least that is what the market is expecting. And in terms of in terms of the commentary, they were pretty, they have resolved, management has resolved its commitment to actually grow the VNB business also strongly over the FY26. Persistent ratio is good. There's strong solvency ratio of 212%. So I think overall you can hold part through for the longer term, take some profit off the table.
Okay. Let's also get the check on the technical front for ICICI Vaishali.
Overall, this sector has been doing well and should continue to do well. And in my opinion, if you're looking at a long-term trajectory, this stock looks all set to go towards 750 and higher. So according to me, it should be a buy at every decline.
Buy at every decline. That's the word coming in on the technical front for ICICI Pru. Next query for today, we have Ravi, who is writing to us from Hyderabad. 30 shares of Vijaya Diagnostics he's holding at a price of 531 rupees per share, making a profit on this one. Should he continue to hold, book profits, and maybe look to purchase Laurus Labs at current levels? Shahina, your view?
I would say he should continue to remain invested in Vijaya. I prefer Vijaya over Laurus. While we have seen some bit of softness in the last quarter numbers that were, say, fourth quarter of last year. But I believe that they are expanding, they're setting up new hubs and expanding their capacity. So I would say in terms of valuation also, it is not cheap, but I think there is an upside from here for Vijaya. So I would prefer Vijaya over a Laurus. So remain invested in my view.
Okay, remain invested in Vijaya on the fundamental fronts is the view coming in from Vaishali. I beg your pardon, Shahina. Vaishali, what's your view coming in for Vijaya?
Well, I would not have any view for this because right now it's just consolidating. So, I think China is a better person to take a call on this.
Would you want to say anything on Laurus Labs levels?
I would say, I am also looking at Alchem Lab. Those are the stocks which would do well. So yes, I would prefer an Alchem or a Laurus. Laurus has already done its bit, but Alchem looks good at these levels.
Okay, surely keeping an eye out on that. Next query for today is coming from Kunal, who's writing to us from Dehradun. He's holding 145 shares of Lakshmi Organics. This is at a price of 458 rupees per share. He's been holding it for a while, clearly making a significant loss here, Shahina. So he wants to know when is the right time now to sell the stock, because the loss is already, the stock is halved from the levels of what they've purchased, right? It's around 200. Shahina, what should they do now?
Yeah, so now it becomes, after this big correction, it becomes difficult actually to see a sell, because now valuations have started, if you look at historical earnings, started looking pretty good. It's a small cap, but, and if you see valuations now, just to finish that point, are not expensive at just about 1.5 times sales. So it is not expensive in terms of your numbers. But at the same time, it's a small cap, and you could relook at it after some time. Sell at a bounce, because the management has got huge plans for growth. They're talking of 1,100 crores of investments in new plant. They're talking of a tie-up with Hitachi Energy. So they have got good plans. The stock has corrected so substantially and it is consolidating. So I would say keep a stop loss and review it some months down the line.
But does it merit even adding some more, maybe averaging it out? Would that be helpful, or just hold on to it and maybe wait for a bounce?
I would not say to add any, because it's not something I would add to my portfolio.
Okay. So just wait for a bounce before you look to sell it. So yes, wait out for that. On Vaishali, on the technical front?
I have a slightly different view, because actually, if you go to see most of the chemical stocks, these organic stocks, they have shown signs of revival. And talking about Lakshmi Organic per se specifically, I think it's on a road to recovery. The worst is already done. It's purely on technical terms, it is taking higher bottom. So now I would say 190 acts as a very good consolidation level. And gradually the stock can go towards 240, 250. I would take the risk of adding more at this level, because it would make it a favorable risk reward. Keep a stop loss below 190. And if this view goes right, if we see a trend setting in this, you may probably get a better rate of your entry and come towards 240, 250 to start with.
Okay, that's going to be interesting. So different views coming in there, but yes, pick your bet then, whatever you all like as well. Do your research, that is important as well. But that's the view coming in on the fundamental as well as technical front here for Lakshmi Organics. Next query coming in is on Eternal or Zomato as we know it. Mayank Khurana is writing to us from Delhi. He is holding 100 shares of Eternal at a price of 230 rupees per share. He's asking if she should continue to hold or look to sell at the current levels. Shahina, Eternal, it's a two-player market. Not much to worry there, but are there any glitches that we should watch out for? And should the viewer continue to hold this?
Between the two, Eternal is, I would prefer Eternal to be invested in. But at the same time, competition is really getting strong in terms of even new entrants that could, listed entrants that could, give you more options to invest. Having said that, at current levels, I would stay invested in Eternal. The Q1 numbers are expected to be pretty strong on all parameters. So, remain invested.
Remain invested is your view coming in. And on the technical front also, Eternal, remain invested or maybe a book out of the stock right now?
So depending on your time horizon, right now it is into a little bit of a profit booking. So if you're a trader, 255 acts as a stop loss. But if you're a long-term investor, then please continue holding. This can show 300, 320 in times to come.
Okay, keep an eye out on those levels over there for Eternal. But on that note, ladies, we're absolutely out of time on this edition of Your Stocks and CNBC TV18. So thank you so much, Shahina, as well as Vaishali, for joining in with us as always. And hope you all have a great weekend. And viewers, thank you so much for joining in with us and watching us on this edition of Your Stocks. Thank you so much for tuning in. Up next, you have Closing Bell to take you through the last hour of trade.